live coverage of financial markets on ET now. I'm Nikunj Dalmia, and before I welcome my guest, I just want to take a moment to introduce the company. From an unknown brand to an unforgettable journey, from a incredible listing to a smart way forward. For a company where ethos is perhaps built around creating shareholder value, identifying the problem, and then giving the right solution to the customer, and with the interplay of a lot of corporate governance. That's the story of IKS, and it has been such a pleasure to see a company which I've tracked for almost 10 years now going public. And for any entrepreneur, when a company goes public, it's a dream and it's an exciting day. And I'm sure for IKS, this is just the beginning of many milestones, and this is just the beginning of the dream. So Sachin Gupta, whole-time director and CEO, along with his CFO, Nitya Balasubramaniam. They make a formidable team and they're joining us. So let's welcome you both with a big smile. You've gone public today.
Thank you, Nikunj. Thank you for having us.
Come on, you got to smile harder, sir. Stock is up 40%. You were not expecting that. A bigger smile. Okay, Sachin, what should shareholders expect now? I mean, the easy part was to go public. The difficult part is to stay on the course, and the promise which you gave of TAM, growth, underlying relevance of the business to stay on course. How do you plan to do that?
Yeah, Nikunj, I think honestly, beyond a point, not to sound cute, but really nothing has changed. We're talking about an industry where we have a $225 billion TAM, of which only 30 billion has been outsourced. And that 30 billion is now growing at 12%. And we've already built an industry-leading position as a platform to enable these providers to deliver better, safer care by delegating their chore tasks. And, you know, we have, if I remind you, we have about 155,000 physicians in the US in our current customer base. That's 18% of all of America's physicians. And we believe by the cross-sell of our platform across these 155,000 physicians, we should be over the next not 2-3 years, but if we do right, by the next 10, 15, 20 years, we should be able to deliver growth that is far greater than the 12% at which the TAM is growing. And then you already know that we've established a unit economic model that is fairly strong and industry leading. And we believe that there is some more tech leverage to be had. We are transforming Acuity Margins, the company that we acquired last year. And so that's going to kick in as we go forward. And so we are fairly confident that over the next at least 3 to 5 years, earnings growth will be even faster than revenue growth. And so we feel absolutely steadfast in our commitment towards that. And I continue to believe that this is not just the creation of a company, but it is the creation of an industry that is going to get formed over the next 10, 15, 20 years.
Nitya, the growth of 50% in revenue, 38% in EBITDA, 26% in profit. At some point in time, the base effect would kick in. How far is IKS away from that base effect?
I think like Sachin pointed out, I think the growth runway is really long. At $30 billion out of the $225 billion TAM, clearly there is a massive runway. So I don't think we are anywhere close to the base effect kicking in. But I will say that I will refer to what Sachin was talking about in terms of our growth and what we expect to deliver as well. We do expect to do much better than the industry growth rates of 12%. And in terms of margins as well, we hope to touch a steady state of around the early to mid-30s EBITDA margins. With the Acuity acquisition, you'll note that our margins had come down because the acquired entity had a lower margin profile. So we will therefore be able to grow faster in terms of the bottom line. And once we hit that steady state, I think margins will probably stay at that level.
So what should be the margin trajectory? Because this is a high growth business. If operating leverage and if financial leverage kicks in, then FY26 and FY27, at least at the bottom line level, Sachin, would be significantly better. So when will the real synergies of this acquisition kick in, and when will that translate into your bottom line?
So I think we see that happening, Nikunj, over the next 18 to 24 months. In fact, it has already been witnessed our EBITDA margins in the first half of fiscal 25 that was just released with our RHP grew by 400 bips over the pro forma margins of FY24. So we've already gone from the 24% pro forma in FY24 to 28% pro forma in first half of FY25. And like Nitya was saying, we are very confident of being able to drive that up towards the early to mid 30s over the next 18 to 24 months. And we see very good visibility to that. And that's the level at which we start to see margins stabilize, Nikunj, is that sort of early to mid 30s EBITDA range.
Sachin, we are going through a time when tariffs could be coming. There is a challenge in the way how IT outsourcing model is going to evolve because of AI. There is a scrutiny when it comes to H-1B visa. What are the regulatory challenges which you see or foresee because of the change of administration?
It's a great question, Nikunj. Look, obviously, it's really hard to call that. If I could, it would be $1 trillion opportunity. But I will say that from everything we've heard from Mr. Trump and some of his advisors like Mr. Musk recently tweeted that there's $1 trillion of waste in healthcare that they're going to look to eliminate. Our business model is all about eliminating administrative waste from healthcare. So fundamentally, I feel like just like it has been historically, regulation in healthcare is going to be our friend, not our foe. That's one fundamental aspect of healthcare regulation. As it relates to tariffs, Nikunj, it's really hard to predict. I feel like it seems to me that those tariffs are directed elsewhere in the world, and India and the US continue to be geopolitically more and more proximate. And so I really don't know what to make out of the tariffs. That'll be a countrywide, industry-wide issue, and we'll all deal with it if it were to happen. But I think from a healthcare regulation perspective, I can tell you over the last 18 years, we've seen many administrations, Republican, super conservative Republican administrations, super liberal Democratic administrations, and healthcare has found its guardrails. Everybody is trying to drive efficiency, and business models like ours that are about driving efficiency in healthcare and eliminating waste are all looked upon very favorably. And honestly, Gen AI is a massive tailwind for our business. We're working on at least 7 or 8 Gen AI use cases amongst our 16 features of our platform. And so we look at that as a huge accelerator of the value that we create first for our customers and then eventually, obviously, for our shareholders.
Nitya, so I'll pick it up from where Sachin had left last time, which is the size of the market. And I'll break it for our viewers. That is known as TAM. That is the total addressable market. I'm just simplifying it for our viewers. That's about $250 billion. You have less than 10%, less than 5% market share in this total addressable market. Now, if the addressable market is so large, what is stopping the big boys to really come into this space? Because if I look at the Indian IT services, if the TAM of that market is $250 billion, well, that is also highly competitive because the size of the opportunity is so large. How are you looking at bulletproofing yourself, or what is the moat which you will be able to create from future competition, Nitya?
Thanks for the question, Nikunj. We do believe that there will be more competition, and we welcome more competition, right? We spoke about how large the TAM is and how much room there is for us to continue to grow. And there is enough space for another 4 or 5 multi-billion-dollar companies that would get created over a period of time. However, the reason we believe that we could be one of those larger companies as one of the last men standing is actually because of multiple things. One is what Sachin was referring to before, which is that we are one of the only companies which has built a complete platform which is able to take on the administrative chores and deliver efficiencies to these organizations. What we see out there in competition are more point solutions, right? Few features at a time. The second is each of these features have been built over the last 16, 17 years of the company in very, very deep conjunction with our customers. And we think while maybe it's possible for others to build it, it's going to take them time, right? And the third is, again, the rich data that we now have in our system. With about 155,000 physicians in the installed customer base, we have extremely rich data that is flowing through our features. So this actually, therefore, gives us the ability to be able to mature tech faster than anybody else. So these are some of the reasons why we believe that we will be able to maintain the competitive edge that we have. But your earlier question, we welcome competition. We think there will be more competition.
Sachin, from an unknown brand to an incredible journey, you've made the impossible look easy. But like I said initially, that next 10 years would be exciting as well as challenging. We are in 2024. Hypothetically, if you're celebrating 10 years of your listing on the same platform, on the same forum, 10 years from now, 2034, what do you think we are likely to be discussing?
That's a great question, Nikunj. Thank you. Look, I think what we are likely to be discussing is one, how much broader the breadth of the platform has become 10 years from now. Because our constant strategy is we take on these tasks in a human-led and tech-enabled model, and then we transform them to a tech-led and human-enabled model, and eventually we eliminate the human altogether. So my vision is really that over these next 10 years, for the 16 tasks that we have today in our platform, we would have eliminated the large part of the human element through the technology interventions, and we would have taken on another set of 5, 10, 15 tasks that have not only expanded the TAM, but more importantly, have truly eliminated all the chore work that providers are subjected to, so that they can become the true counselors and navigators of journeys for patients in their care continuum. And that really is our vision. 10 years from now, we want doctors and truly focused on patients and the physician-patient relationship to rediscover its sanctity and again become the most important relationship in healthcare. If we did that over the next 10 years, I think we would have done a good job.
Ditya, when I started my career, which is 25 years ago, IT services was in a high growth sector. Today it is called as a mature industry. So if I have to draw a parallel as to where this entire healthcare outsourcing industry is headed, can you compare it with IT services? If 2000 was the high growth point for IT services, where are you in terms of that journey before you hit the mature curve?
Thank you, Nikunj. I think we do see a lot of parallels with how the IT services industry has evolved. We are, of course, a fledgling in that sense, and we hope to see the kind of expansion and growth rates that IT services did. A couple of things I will highlight and why we believe now is an inflection point for the industry. We do believe that COVID was that watershed moment for our industry. Two things happened, right? One is a lot of doctors and nurses who provide care permanently dropped out of the workforce because of the burnout. So the demand-supply gap that already existed has only exacerbated, right? So now these provider organizations are having to deliver care with the fewer number of doctors and nurses that are on board. The second is during COVID, of course, patients did not visit the physician clinics. They got COVID and they ended up in the hospital, but they did not step foot inside a physician clinic, which meant that these provider organizations realized that the fixed cost operating model that they were working with was completely unsustainable. What they realized they needed to move towards was a more variable cost on-demand model, which IKS is able to provide. Right? So coming out of COVID, we do see an inflection in the growth. We do see a market difference in the kind of conversations we are having with our customers. They're a lot more keener to come on board with the full manifest of the platform. They're a lot more keener to look at more and more features right from the get-go. We do therefore believe that COVID was an important inflection point therefore for an industry. And we do hope to see that $30 billion, which is now expanding at 12%, probably expand even faster in the near future.
And Sachin, before we wrap it up, the success of Indian IT services was the fact that it had skill, scale, and availability of the talent pool. So for your industry, given that one side skilling has been a problem in today's AI time, how would you ensure that your talent pool engine is being taken care of? I mean, is there enough and more talent which is available, or you'll have to really sweat it out to ensure that your organization has enough talent pool and it is future ready?
So Nikunj, what we've seen over the last 18 years is we have three pools of talent that we typically require. One is, of course, technology talent, which is available in abundance, especially now that we are starting to create a little bit of identity around being a true product company that is writing technology, proprietary technology to eliminate tasks. So I think technology talent is going to be obviously the mainstay of our company. The second big dimension is clinical talent, both clinically qualified physicians, but also other clinically qualified staff like pharmacists, etc. And I think that is an area in which we've actually been able to access some excellent talent. And, because we are constantly eliminating the human task through technology, what happens is as we grow, our talent needs don't grow linearly with revenue. So at the confluence of the non-linearity in talent growth needed to support the revenue growth and the abundance of technology talent, as well as the relative availability of clinical talent. When I say relative to any other country in the world, we are able to bring English-speaking clinically qualified staff in India better, faster than any other country in the world. And then last but not the least, the third pool of talent is really the administrative talent. And at the confluence of all these three, and honestly, Nikunj, what we've built now with 10,000 people strong in India, if you apply some turnover rate to that, as well as standard growth rate, the reality is you're talking about 2,000 to 3,000 additional people being added a year, at least, maybe even more. And, we've now built a whole talent engine that actually brings this raw talent from the industry and makes it fit for purpose for our organization. So I feel relatively optimistic, and I honestly feel like in IT services back in the 90s, I think India used to graduate 1/10 of the engineers that we graduate today. As the demand for engineers kept growing through IT services, we graduated more and more talent. And so I actually believe this will propagate the expansion of clinical talent education in India, which then we will be able to further absorb into this industry.
Well, fantastic, Sachin, Nitya. We started with the big day, which is today, our listing. We spoke about the near term, which is next couple of quarters, and the advantage and how the acquisition would kick in. And we are wrapping it up with the big picture of next 10 years. And I'm sure the incredible journey of IKS would be even bigger and brighter than what everybody is emphasizing today. So fantastic, and thank you for joining us.